afternoon show on how many contracts have been traded today. Tomorrow, remember that tomorrow is a live launch, a full hard launch of the derivatives market. Also, we are streaming live on YouTube, Metropole TV. Please, you can tune in there. We are live on YouTube. A very important aspect to mention that we are live on YouTube. Be there.
Live, very exciting times.
Yeah. But we're talking back to discussion, getting back to our discussion, we're talking insurance sector. And be there, we were talking about the balance sheet composition of general underwriters. And if you look at some of the charts, we have one of the charts of the balance sheet items, look at 2018. And this is what I was talking about, that if you look at for instance, the fixed assets were about 46 billion shillings, and you had obviously the liquid assets were just about 128 billion. Of course, the bulk being government securities, being about 61 billion. Okay, it makes sense to understand why they buy government securities, because they're liquid business. But I'm just wondering, you have about 46 billion shillings locked in fixed asset, which is mainly your land and buildings. I just say for someone selling 12-month policies, should you be having 46 billion shillings sitting in land? Is that not a lot of money? Unless you're saying you understand your business very well, but I don't think that general insurers who basically sell policies that expire in 12 months, if a risk crystallizes, let's say in the 6th month, what's the turnaround of selling land? And Patrick, do you think this is prudent? Do you think 46 billion in fixed assets is such a lot of money?
It's a lot, but I think they're also banking on the relatively liquid portion of government securities, hoping that yes, they might have a certain portion which is tied up over the long run, but they wouldn't require to liquidate 100% of the portfolio, so they can put a certain amount. I think that's what they're banking on, as much as it might not be prudent, and probably the exposure might be a bit more less. Again, the capital requirements which are coming through, and the liquidity requirements as well, I expect to see much more regulation on this, because this is part of this is what is causing most of the problems you're also witnessing in the sector. Put too much emphasis, because traditionally insurance has been collect premiums, as you wait for claims, you put the investment income in, something which you're sure won't have like erosion of capital. But we have seen other insurance companies like Britam, for example, putting a huge section of the investment income in equities. When the equities market is down, they record a loss. When it's up, profit. So you see that's variability is not very good. It's not proper of insurance company, in my opinion. Investment income is supposed to be there to sustain the premium growth till you receive claims on the other end, but some of these insurance companies are becoming too greedy, chasing equity returns and fixed assets over the long period.
Greed is good.
I'd like to touch on that, on literally investment income, and how the insurance companies typically raise money through money market offerings to the investing public. But let me come back to Britam. There's been some activity we've seen on the stock market.
Very big
volumes. I mean, one of the days last week, it was a top traded stock. What is happening there? How is Britam's investment model? Would you buy it?
With Britam, it's quite tricky, and as I mentioned, I think the biggest problem they are having is their investment income, because if you look at the top line, it has slowed down the premium growth, and claims have gone up slightly, but fundamentally the business is okay. The problem comes in now at the investment income level, where their exposure in the equities market is significant. And right now, at the moment, investor sentiment on the equities market is not very good. Right now, in the foreseeable future, because of foreigners and the foreign-led sell-off due to our economy now, matters of debt and our currency, suggestions that it might be overvalued.
So then, do you have a sense of who's interested in buying it? And if for instance, I'm an institutional or a strategic investor, when I'm looking at Britam, you're saying the business is fundamentally okay. The only issue that is apparent is their investment income and their model with regards to the amount of money they have allocated to equities. Is it a material sum? If I look at Britam today and say, put aside this risk factor, would it be an asset that you'd want to buy as a strategic investor to give you access to the insurance market in Kenya?
Yes, definitely. Not only in Kenya, but also the region, because remember, Britam have operations both here and in another 6 countries, sorry, outside the region. They also have a diversified business. Not all insurance companies have asset management as well on the side, and their partnerships with also banks on bank assurance is also something which is quite commendable. So they have a diversified business. They are heavy in the region, and I think that if I was to select one of the insurance companies, it would be one of the top because of that diversity.
Okay.
Yeah.
Then my final question, just on Britam, when you're saying it has really a good operational model in terms of its tentacles in the region, in bank assurance, its diversified portfolio, is there an opportunity for growth in the insurance sector, mostly in Kenya and in the region where Britam is? Because on one end, we are talking about the infrastructure of this sector, and we're saying IFRS 17 is coming to clean it up from now up until 2021, and it looks like there are more risk factors associated with the sector than there are opportunities. But on this end, you're saying Britam is in a good space. So the question to you, Patrick, is there any upside in that sector? So that if I'm looking at Britam, for instance, or CIC or Jubilee, then I'm actually buying into companies that are able to tap into that opportunity, or alternatively, I'm only buying maybe for the dividend return.
Okay, for insurance, the dividend return is quite low. Across through, you may get 2%, 3% if you're lucky.
Very low.
Yeah, very low. Below 5 for all of them.
That's
that's
very
even
below inflation.
So do you even have any business buying?
What I think,
yes,
because you can see where this discrepancy is coming in, I think Britam is a good company.
Okay.
Though the insurance sector is not
a good
really
sector.
Yeah, it's not really that top. And I think one of the reasons why they're suffering, because you've mentioned we've seen a lot of activity also in the share price and etc., not only for Britam but the other insurance companies, is primarily because of the story they have been trying to sell over the last few years. Because the story since I think 2010 has been low penetration,
but it
below 3. Yeah, it doesn't improve. Even last year it went down from 2.9 to 2.7. So I think also market.
I think for me, I always wonder: is it this premiums to GDP? Is it the best measure of insurance penetration? We should come up with another metric on how to measure insurance penetration. You know, sometimes premiums don't grow, GDP grows, then it shows that penetration has gone down. There's a lot of discrepancies here. But yeah, let's talk about. Sorry, Patrick. Let's talk about the composition of the premium market, right? So we are a heavily short-term insurance business market, where short-term premiums account for almost slightly over 60% of all industry premiums, and this is primarily because motor vehicle insurance is, for instance, is mandatory, and motor vehicle insurance is a huge composition of the general business. Do you think that globally they say that the global markets are driven by the long-term insurance? Do you think this speaks to the lack of penetration, lack of sophistication in our market? Do you think this insurance should still be mandatory in 2019?
Okay, it should be mandatory for some segments of the market, like motor, as you mentioned, but not all through, because that's now forced insurance, and now that will probably see an increase in the cases.
Marine is also now mandatory.
Yeah, and it becomes mandatory. The more you make things mandatory, then you get increased cases of fraud. Because now it's mandatory, you have to pay for it, and it becomes
to pay for it.
Yes, and also becomes a situation because, for example, medical. It's taken up, you go to the doctor, and some of these things I usually say, okay, I think one of the reasons our economy is suffering is because, or rather insurance sector is suffering, is because of the culture of impunity also. They're also affected by that. Yeah, because you go to the doctor, get a cover. When you go and your cover is almost over, you'll hear just deplete your cover, it's almost finishing, and you'll get a new one. So just pick another one. Just let us treat you, even things which you're not sure you have, or you problems or extra. So it's also the impunity, the culture of entrenched in us that is also
so we're always stealing from ourselves,
affecting the insurance sector.
So then we should just sit and say it's okay, like just let everything be, because we're the perpetrators of exactly what's happening to the economy. We're stealing from ourselves.
Yeah, we've had that discussion here. I think behaviorally our insurance market doesn't encourage discipline.
Yes,
that's
it doesn't. I think it's a behavioral issue.
And also I think the insurance companies themselves are not disciplined, because their thought process, or rather how they look at it from return perspective, they just craft a policy, the disclosures hide them in the back or whatever, don't reveal anything, and when someone comes to claim, they think they have a good claim, you come and show them one of the provisions. So that
the exclusions.
Yeah, the exclusions just show them. So what that does, it brings distrust in the sector, and that's why even the penetration levels might probably be
low.
Yeah, it may be one of the reasons because of loss of trust in the industry.
But you bring out a very important point, especially when it comes to life insurance, the element of trust, because we do hear of people who go and take investment policies from the insurance companies, maybe a 5-year, a 10-year, or a 15-year. And when they're taking them, there's always the intention of making good their monthly payments. Then, for instance, something happens like the redundancies that have been happening, and yet people had planned. So when they go back to the insurance company says, sorry, we're not giving you your money, and neither do we care whether you get a job or not. So it disappears. Could that be what explains the low penetration of life insurance? Because there's a way they have not found to be able to manage the risk and also consider the fact that this is your money you have been putting in. But if you're made redundant, you cannot get it.
I think for me that's a very important point you're raising. I think for me the underwriters actually haven't sold. Look at the sales process today of insurance products. They literally sell it to you. It's a sales-driven business. We don't buy insurance. Like, for instance, look at your phone. How many insurance apps do you have?
No, George, I want Patrick to answer my question on life insurance. And I get you have a good point. Because there's an element of distribution, but there's also the element of trust and the fine print. So, George, today, for instance, if you have been putting, say, 30,000 for your children. Okay, you have children. Do you have children?
No.
For your unborn children. Maybe you're saying you probably plan on having 2 children and you're in the investment industry and you want to plan in advance. So you maybe take a 10 or a 5-year policy.
Or a 15-year.
Or a 15-year policy. Say, I want to be able to pre-fund the university studies. Then you start putting 30,000 or 40,000 or 5,000, whatever amount you're comfortable with. What does that mean if, for instance, anything happens to you and you're unable to make your monthly payments? Because when it comes to life insurance and you're talking about the life, the fine print, typically you have 3 months. If you're not able to make good, and for instance, you have been contributing for 4.5 years and you're not able to make good for the next 3 months, you lose your 5 years of contribution. How does that look like in terms of trust?
Punitive.
Exactly. And I think also it comes back to in the insurance sector, are they looking to solve a problem? Or are they looking to make money?
Exactly.
They have to choose, because right now it looks they're just looking to make money. They're looking to solve a problem, then
you'll be very innovative.
Yes, and in the process they make money because they're looking to solve a problem for someone. And when someone comes up with a claim over a period of time, for example, if it's the 4.5 years you've said you've been contributing and you lose it over barely the 3 months,
they should be able to just
and there should also be an innovative product at least to recover some portion of that sum which you have been investing over that period of time.
Does that happen in other countries globally, or are we just saying that this is how insurance, when it comes to life insurance, that's how it works?
We also want to, because comparing with other cultures, and there's something also we are forgetting, even if we go back a bit, probably another reason why the insurance penetration levels have been quite low is also we have stuck a bit to the traditional aspects, what we call, for example, Harambe. When funerals happen, people come together from WhatsApp groups, and that acts like an insurance. So you don't see there's need for insurance, because if something happens,
that's a good point.
If something happens or there's any adverse shocks in your life, then you just be able to get it from
medical fundraising.
Even medical fundraising.
Even medical fundraising.
Even educational. Education is not that apparent.
But it used to be. It used to be quite huge. It has slowed down. So you see, this is also part of our culture. In the developed countries, I don't really think they have such huge or significant how can I put it?
Social fabric.
Social fabric outside of Africa.
There's a less of an integration on that front.
Yes.
But Patrick, let's talk about the health of the general insurance business, and we're looking at the 4th chart here. Last year, that is 2018, motor private, motor commercial, basically the motor vehicle business reported an underwriting loss of 3.4 billion shillings. That's a massive loss, Patrick.
It's a massive loss, and most of the companies have been attributing this to.
And look at medical, lost 1 billion shillings. The medical business. So the medical business and the motor vehicle business alone, which account for 60% of general insurance premiums, reported a combined loss of 4.4 billion shillings.
Yes.
Patrick, these guys are bleeding money. They are bleeding money.
They're bleeding money, and around the insurance companies we've talked to, especially management, have cited cases of fraud have around 20%, meaning around 1 in every 5 claims are considered fraudulent. So that has been heavily driving this. We have seen some insurance companies also step in trying to do something about it.
But how do they know about it, and who does it? But you were saying CIC is doing something?
Yes, they are doing something because they started a motor vehicle assessment center, where if there's a problem with your car, you don't take it to the garage, just take it to their assessment center, and they have their people there who will now assess the instance, the incidents, what happened, etc., and determine if there's a good reason for a claim to process. Okay. However, that has not really reflected in their results thus far. So I suspect it's quite slow. The results of this assessment center, are quite not yet clear, because in the results you still see claims are really shooting up, and motor is also.
Yeah, you can see. So you see fraud, a lot of fraud in this.
Yeah, so
3.4 billion.
Yeah, so the problem is that insurance also have not found a way to
tap. And look at the motor private vehicles. Private vehicles are the biggest drivers of. Look at a loss of 2.6 billion, Patrick. That's humongous. Even bigger than PSV.
Yeah, and here what I'm saying is a case of damned if you do, damned if you don't. Because even if insurance companies were to find a solution to the fraud, you just increase the distrust from other sectors, because the population or other people will be like, these guys don't want to pay. That's why they're starting all these complicated things and etc. So I think there's a really, even though they haven't found a way to curb some of these issues, the fraud issues, I think it's something which is significant, and even solving it won't be a cast in stone. It won't be something which will be easy, and that's why they haven't found a solution to it yet, because it's not very simple.
It's not simple.
Yeah.
Can I just jump in?
Yes.
I always like to just look at this and put it in an income statement or a balance sheet or a cash flow statement. So then how are they funding these losses? Would this explain why we see a lot of investment income, or a lot of money being allocated to the investment side to be able to counter these losses? Would this also explain why we see the likes of CIC and Britam and Jubilee, most of these insurance companies, aggressively going out into the retail market and collecting money market funds? Would these funds be used to offset these losses, or how do they offset these losses?
Certainly, I'd imagine that given the increased cases of fraud, and for a while now, insurance companies, in fact, it's not a Kenyan problem, even worldwide.
Okay.
Companies usually make, or even the top companies, they make an underwriting loss, meaning from their core business, they're not making money. Okay. It's not only here in Kenya.
It's everywhere.
Also, everywhere. It's throughout the world, that one.
Okay.
Yeah, even the biggest insurance companies, look at the top 10, you find around 8 of them.
They're all
underwriting loss. So it's something which is very common worldwide. It's not, so
it's common worldwide. It's not unique to us.
Yeah, now
then
too much.
My final question, sorry to just interject. Okay. If it's occurs everywhere, as an investor, as Mbithe, if I'm putting my money in the money market funds, are they safe? Is my money safe when I put it with safe? Because CIC is very, there's always that conversation of, do I buy CIC the stock? It's a penny stock. Do I put my money with CIC as a money market option, and is my money safe? Because we're sort of seeing the risk factors associated with the sector, which are apparent and some are not apparent. How do I look at it if I'm an investor in the market?
So yes, your money will be safe, because remember, as much as even these top companies are making underwriting losses, the bottom line is usually positive.
Okay.
Because they're supplementing this with investment income and other income.
Okay.
Yeah, from other operations now done here in between. And the same with Kenyan companies. They've been making underwriting losses. Kenyan insurance companies are making underwriting losses, but look at the bottom line, it's positive.
It tends to be quite volatile.
It might go down or up slightly. Okay. And with the sole if you remove Britam, because that's a unique case, investing too much in equities, others you'll find it tend to fluctuate at a certain point in time. So if you're not able to supplement enough investment income, you make a loss.
Okay, great. Thank you, Patrick. I think for me the key pattern here is that if an insurance business is half of it is half or more than half of it is general insurance business, I'm not buying that stock. I'm shorting that stock.
So what are you buying?
I'm not buying, I'm shorting all the insurance stocks.
And may I ask, what happens when, because I believe right now in the insurance, as much as, yes, they should suffer in the stock market, I think there's been overreaction. Some of these stocks are trading at probably 0.3 times, like Kenya, for example. The price to book is very low. So at what point do we say now that this stock has become so cheap that now we can buy it, even though the sector is...
So should we buy Kenya Re? Would you buy Kenya Re?
Okay, for the long term. For the long term,
okay.
I think insurance is a good
Okay.
buy. But if you're looking at a short-term horizon of 3 years or less, probably insurance might not be the sector to.
There you have it. Thank you, Patrick Mumwa, research analyst at Genghis. Our profitable moment for today morning is buy insurance for the long term. But for the short term, let's short them. Let's short them, be there. It's been nice having you, Patrick. That was Patrick Mumwa, a research analyst at Gain Capital, taking us through the insurance sector and the investment case and the health of the sector. We leave you with the market open statistics, and we see you in the afternoon. Good morning.